Okay, my name is Brian Short, and many of you might know me from the High Velocity Wave Trader. I run a live room pretty much each and every day, and active day trader, but that's not what I'm going to talk about today. I'm going to do a Bitcoin review. Cryptocurrency is a passion, another passion that I have. I think cryptocurrency can be a way to diversify your overall portfolio. You really should look for that diversity in what you do. I personally have long-term investments. I have short-term active day trading investments, and a good mix of that in your portfolio is really where you should be. So what I want to do over the next few minutes is walk you through Bitcoin price activity in 2020. And specifically, I want to point out why the move we're seeing in 2020 is much different than the move we saw back 3 years ago in 2017. If anybody here lived through 2017 like I did, there was a lot of excitement back then, and I want to go through the difference between the two, compare and contrast, and why I think Bitcoin has a much higher distance to go here in 2021. So with that, let's dive right into it. Before I get into the specifics of the 2020 recap, I want to set a foundation and give you some information on Bitcoin. If you're not familiar with it, I want to give you just a little bit of information about it, and so you understand a little bit clearer why the price has the potential to rise even higher. So Bitcoin was created in 2008 by the author Satoshi Nakamoto. He wanted to develop an electronic cash system that's peer-to-peer. Bitcoin is decentralized, it's limited. So no one country or government has control over it. And there are a finite number of Bitcoins. 21 million Bitcoins will be mined at the end of 2140. Everybody in this room is not going to survive to 2140. So it's going to, be well past our longevity to see that event, but that's what it will be eventually. Now, the current supply, as of yesterday, when I was preparing the presentation, is 18,500,000 roughly. And that leaves 24 million to be mined over the next 120 years. A couple of things here that I want to point out. Why would you want to invest in Bitcoin? Well, there's the whole concept of the shrinking US dollar. And just going back, even before 2020, going back to the 1900s, what you could buy in 1900 versus what you can buy today with a dollar is drastically reduced. Each one of these events over time depressed the dollar's value as we moved forward in time. And you can see them on the chart here. And I'm going to talk more specifically in a moment about the actions of 2020 and how that same thing is going on. A little fun fact here, back in May of 2010, programmer Laszlo paid for a pizza with 10,000 Bitcoins for 2 Papa John's pizzas. And I calculated this yesterday. The rough value of that pizza in today's Bitcoin is $266 million, the most expensive pizza in the world. So I want you to hang on to that thought for a moment. That was 12 years ago. And as we look forward to 10 years from now, where might Bitcoin be? And I want you to think about this process in a little bit longer time frame. So keep that in mind as we move forward here. A little bit more on the history. Over the last 12 years, we've had 3 halving events. What's a halving? Well, there are miners on the network, and it's the miners that actually do the confirmation and the processing of transactions. They get rewarded for being on the network. And back at the start, it was 50 Bitcoin per reward that was found. But that gets cut in half every 4 years. So we've had 3 of these events, 50 to 25, 25 to 12.5. And currently in May of this year, we had the halving down to 6.25. In the 2 post-halving years, so that would be here, 50 to 25 and 25 to 12.5, we saw a 6,000% return on investment. In other words, after this halving, shortly thereafter, about 6 months after, you saw an increase in price, roughly 6,000%. In the second one, the 25 to 12.5, we saw a return on investment of about 2,000. So that just means simply price rose during that time horizon right after the halving in that regard. What could we see in 2021? Probably not those kind of numbers, but even a 400% increase would put Bitcoin price right around $125,000, that six-figure mark. Let's talk about one other thing. Again, this all kind of points towards supply and demand, so that's why this is important. And there's lost Bitcoin in the process. You need to understand that a Bitcoin transaction is irreversible, and you have private keys that you have for your wallet, that if you lose those private keys, you've lost the Bitcoin. There's no way to recover it. You can't, if, for instance, if your long lost uncle left you $1 million in his bank account and you can prove you have rights to that, you could go through a process and recover it. Well, with Bitcoin, it's gone. And so roughly the estimate is there are about 14 million BTC that will ever be mined. And looking at this graph here on the right-hand side, you can see the mined Bitcoin as it approaches the 21 million mark, but the circulation Bitcoin is going to be much less, right around that 14 million. So again, it comes to supply and demand. We're not going to have 21 million Bitcoin, at 2140. It's going to be somewhere less than that. So the one other thing I want to point out here, and that is, if you are an active Bitcoin person, some of you are in here, I highly recommend you protect your private keys. I went through this process personally recently. I have my private keys in 4 different locations. Now that might be a little overboard, but I just wanted to make sure that if something happens to me, that my state has access to it. And I also just went through this process with a good friend of mine who has a substantial amount of cryptocurrency. And for a moment, for 45 minutes, we were fretting that we lost access to his 4 Bitcoins that he had, which is a pretty substantial amount. And ultimately, we were able to get everything set. Needless to say, he's given me his private keys at this point. He trusts me, and as another point of contact. But anyways, the point I want to make to you: make sure if you have an investment in Bitcoin and you've got that wallet, that you have your private keys backed up multiple places. So that's a little tidbit from today, if you take nothing else away from this. All right, so what I want to do is look at the last 3 years. This is a weekly chart on Bitcoin, and there's some things that we can derive from this chart that I think are important before I get into the detail and support of what's going on this chart, which I'm going to do over the next few minutes. So first of all, back in 2017, as a refresher, I remember this, there was a ton of excitement as Bitcoin price was breaking up through 3,500, 6,000, 8,000, roughly in through here, and then spiked all the way up to 20,000. I remember at this point right here in December thinking, and everybody was thinking, oh, Bitcoin's going to fly to 50,000, which would have been, up in past the chart that you can see here. But it didn't. What did it do? It actually, reversed and came all the way back down to in November of 2019, back below the low here that was set in October, November of 2017. So what's the difference here? The fear on this move that we had occur in 2020 was that the same thing was going to happen, that it was going to approach this all-time high and then reject. That's typical on any kind of a instrument where when you approach a previous very prominent high, it's going to reject. That was the thought here. But what's the difference? What I want to point out to you now is look at the volume. This is what I term retail volume. Back in 2017, you had retail investors, small investors, putting their money into the market, okay? And on this move to the downside then, you had those retail investors basically bailing out and bringing price all the way back down here. So look at the volume bars in 2018. They're a little bit higher than 2017. And then we had this little bit of a push down. And in 2019, I remember this, we had this move back up, and you can start to see again volume come in to the Bitcoin space. And at this point, when Bitcoin hit 14,000 again, the thought was, okay, here we go. We're going to go back and test the highs. But nope, that wasn't in the cards. Bitcoin price again comes down, and bring us forward to 2020, this is March of 2020 right here. My opinion is, had the pandemic not hit, there's a very good potential that we would have continued this move to the upside. And that's actually kind of what happened. This move that you see right here was a liquidation event for margin calls in other investments. A lot of speculation is exactly that. In other words, investors had to liquidate their Bitcoin positions to cover margin on other investments that they had when the market crashed in March. So put that aside. If you don't have that, I think from here, this chart goes like that. But anyways, it does recover very quickly. And then I want you to look at this volume in this section. This is what I call institutional volume. And I'm going to prove to you in a moment that that's exactly what this is. But look at the bars. So look at each one of these years, back again, going back to 2018 here. Then we go to 2019, it steps up a level, and 2020 steps up at an even higher, more significant level. And then looking at the price bars themselves, you can see we've got significant extension of the Bitcoin price in 2020 here, as of, from September through the current date. Now, notice here, there was a lot of speculation when price approached that all-time high of 19,744 that it was going to reject. I mentioned that earlier, that it was going to then, come back down, crash, and there was speculation back down to 14,000 and then make another pass at it, but it didn't do that. What happened here is it exploded up through that previous high and broke through in a significant way. Now, this is typical of any instrument you chart. When you have, in this case, years of what I call coil up, this is price action that is coiling up back and forth. It's not really moving in a, up way here. That's the pent up demand that comes into the market, and a lot of instruments will act this way, and that's exactly what we're seeing on Bitcoin. Notice these bars are the biggest bars that we've had on a weekly basis since that move back in 2017, and this bar here is even probably the biggest bar on the chart. So pretty powerful move to the upside. That's the overall 3-year look, basically high-level look. So let's take a pass at why is it that Bitcoin's all of a sudden moving to the upside again. It's all about institutional involvement, large funds getting involved in the space, not just retail. So the first fund that I want to talk about is Grayscale Bitcoin Trust, and they have been around since 2013. The thing that's interesting on their situation is they hold 572,000 Bitcoin, valued at 16.6 billion. They snapped up about 70% of the minted Bitcoin in 2020. Now I want you to pay attention to that. 70% of all the mined Bitcoin in 2020. All right, so that means anything that was produced by miners in 2020, 70% of that was snapped up by this trust alone. In a moment, I'm going to show you some other numbers that again talks to why Bitcoin is moving up so quickly. This fund also offers other cryptocurrencies. They're called altcoins, Ethereum, Bitcoin Cash, and XRP. But again, I'm going to stick to Bitcoin. And the thing that I also want to say about Grayscale is it's for accredited investors. You as a retail investor cannot get involved. You have to have a $50,000 minimum. And the other thing you really don't want to do in this case as a small investor is use Grayscale, because they have a pretty expensive 2% expense ratio. But nonetheless, large investors are using this vehicle to get involved in Bitcoin. Here's another fund that's starting up, and I put this on the presentation for a couple reasons. One, they're projected to purchase $100 million in Q1 of 2021. And there's a number of these situations, as I looked, and did research on this, where companies are going to be adding Bitcoin to their investment stack. And not only, the thing I want to also point out about this company, GreenPro Capital, is they're using their own cash to do this. And so that's something we're seeing that's different than 2017. Companies are taking cash that's on their books and investing in Bitcoin. And I'll tell you in a moment why they might want to do that. So 2020, the difference between 2017 and 2020 are what we call the on-ramps to Bitcoin. In other words, access to Bitcoin. There are many, many more ways in 2020 to invest in Bitcoin than there were back in 17. So again, it promotes the fact that the price is going to potentially go higher. Back in 2017, I remember when the CME announced that it was going to add Bitcoin futures. Part of that move that you saw back on the chart in 2017, that upward move, was because of this event. And that was just one entity offering futures. That was the CME. Today in 2020, we have multiple entities offering futures. And in fact, look at the value of open interest on the CME. They top it at 1.6 billion. The next entity, second place, is OKEX at 1.5 billion. And Binance, very popular exchange for cryptocurrency traders, is at 1.44. And then you have these other entities that are offering about what, just quick math there, 3 to 4 billion amongst those additional entities. Again, on-roads to Bitcoin and being able to trade it in a different way. Here's a chart for the CME that shows, again, open interest and daily volume at the beginning of 2020, all the way through current. You can see a very, very steady move to the upside and interest in Bitcoin futures. Another on-ramp to Bitcoin is a pretty substantial one that was just announced here in October. Everybody knows PayPal, right? 350 million users worldwide now have access to purchase Bitcoin and cryptocurrencies inside their PayPal account. You can buy, sell, and hold cryptocurrencies in PayPal. Now, the gotcha here with PayPal is you don't have physical possession of the Bitcoin. They hold it for you, and you can't transfer it off of their system. They've done this for a number of reasons. I'm speculating they've done it for the biggest reason is profitability, right? If they require you to buy and sell on their platform, they're going to make money on the buy side and the sell side. And then secondarily, there's the whole know your customer issues, KYC. They can kind of get by with not having to do that process because of outside funds coming in and doing transactions. So anyways, but this is big. They surveyed 380 of their users, and 17% in this very short window had already used PayPal to purchase and hold cryptocurrency. And then the other thing I want to point out is you saw that 70% number back on Grayscale. PayPal and Square have already been buying more than 100% of the newly issued mined Bitcoin for 2020. So now you've got another entity consuming all the mined Bitcoin and pushing price higher. So let's talk a little bit about what other companies are doing in regard to whether they hold cash on their books or hold Bitcoin. So we've got some interesting things going on there, but what's the dynamic that's causing them to take that action? It's the Fed printing press. I shared the graphic with you on the very first slide of the decreasing value of the dollar. And what have we been doing at historic levels this year in 2020? Well, we've been spending money at historic levels, government spending of 6.5 trillion, and we've got a deficit of 3.1 trillion. It's stimulus spending. This is the creation of money to give to you and I in the process of 2020, 2.6 trillion, tax relief of 9 billion, and currently there's, obviously everybody knows, under discussion, 1.8 to 2.2 trillion additional stimulus. Well, what's going on there when they're doing this process? What's going on is the value of the dollar that's at the start of 2020 and at the end of 2020 is less. So what companies want to do to protect that is look to invest in other ways. And some companies are doing that in some pretty big, bold moves. MicroStrategy is one of those companies. And this news press release is from December 21st. Over the final quarter of 2020, they've purchased 70,000 Bitcoins, over 70,000 Bitcoins, which equate to $1.1 billion. This is a single company. that's taking a, kind of a position here that they would rather be invested in Bitcoin than cash. And it's a pretty bold move. We see other companies like Square doing the same thing, maybe at a smaller scale, but nonetheless, there are multiple companies doing this. So they've dedicated 50 million, which represents 1% of their assets as of the end of Q2. And here's a list of over 30 companies that have done the same thing in 2020 that have added Bitcoin to their books in lieu of just simply holding cash. Some of these are investment hedge fund type situations, but some of these, about 20 of these companies are actual companies that do other things, and yet they've decided they're going to hold Bitcoin on their balance sheet. I found this one interesting. I found this article yesterday. I did scratch out the paid in Bitcoin because it got revised today. And it got revised to this. Basically, Russell, this football player, wasn't paid by the NFL in Bitcoin. What he does is he takes half of his pay and converts it to Bitcoin. So that's the clarification today. But again, it's just prominent high net worth individuals investing in the space and taking that position with Bitcoin. So again, back to the chart that I talked about earlier. Biggest difference between 2017 and today is this was retail volume and what I would call weaker volume, right? It was a pretty explosive move up, but it was a very weak move and easily came back down. Today in 2020, what we have is institutional investment. I showed you the proof of that. And that's the difference between 2017 and today. So let's take a few minutes here and think about where is the price going to go in 2021. I'm going to caveat this and say, I like to tell my traders in my room, we don't know jack as traders, right? We can make all these predictions, but ultimately we don't know. We'll just have to see what happens. But we can have some fun here and try to predict where it might go. So JP Morgan, which is interesting. So Jamie Dimon was a staunch critic of Bitcoin back in 2017. In fact, I think he said to his traders, if you even touch Bitcoin, I'm going to fire you. Now he's got one of his analysts saying that he thinks Bitcoin could hit 650,000. To qualify that, he is comparing it to gold, and this is a few years down the road. He's saying that if the same money that is currently in gold comes into Bitcoin, which is possible, that's the valuation it would be. So anyways, I kind of laughed when I saw that and pulled that article in that JP Morgan of all individuals are saying that. So another individual, analyst Simon Diedrich, predicts that Bitcoin will hit 150,000. And his prediction was for 2021. So that's pretty aggressive. But we saw, in my very early on slides that that's possible with a 400% increase. That would be roughly 125 to that 150 area. So that's not unreasonable. It might be a little bit of a stretch as to what I think. I'll give you that in a moment. But so his prediction is Bitcoin 150, Ethereum 9,000, and BNB, which is Binance 500. And then finally here, Mike Malone, McGlone sees resistance at 50,000. I would agree with that. He's a Bloomberg analyst and says that in 2021, he sees Bitcoin hitting about 1 trillion. So that's the update on Bitcoin. And the question is it time to buy? Here's my closing comments to that. Personally, I think we'll see Bitcoin price end 2021 somewhere, I know this is a large range, somewhere between 35,000 and 50,000 is my opinion. Could it go higher than that? It absolutely could. I think it's time for a pullback. If we go to the chart again and just take a look at this, I don't care what instrument you're looking at, you can never go straight up for an extended period of time. It's healthy for a pullback. And in this situation right here, the prior all-time high is now resistance and support. I'm sorry, it's now support. So we could see a pullback to 20,000. That would be very healthy. and then a further extension and move to the upside. Kind of what Shane was showing on his chart. That's a healthy market that moves up, pulls back, moves up, and pulls back. That's stair-stepped effect. So I fully expect we're going to see that, and by the end of the year, next year, we could be landing in that 35 to 50,000 range is my projection. Now, as an overall investment, I would look at this if you're going to allocate any part of your investment, which I think is a good thing to do. Look at this on a long-term basis. I would say my personal position is 10 years. I've got other crypto investments that, they ebb and flow. I don't care because I'm holding on for 10 years. And the same is with Bitcoin. I can almost guarantee you, and I use the word almost, that we will look back 10 years from now on today and say we should have invested, just like the programmer that bought the pizza. He's looking back now saying, I wish I would have held on to that